Hello traders, the title of the video is how to spot smart money activities in the financial market without a hassle, without too much hassle, being able to spot the smart money activity in the financial market. You may say to me, George, I do not care about the smart money activity in the financial market. Why should I care? All right. The reason why we need to check on the smart money activity in the financial market is because they are the one moving the market. So if they are buying and we join them and buy at the same time, we are more likely to be rewarded either as a day trader, swing trader, or position trader, even as an investor. Yes or no? If they are selling, and we know that these people are selling, if you have been holding a bullish position for a year, you buy and hold, and you realize that the smart money starts selling, you quickly call your broker and also close your position because before those profitable portfolio turn into losing portfolio. All right, yes or no? So whether you are an investor or a technical trader, you want to keep your eyes on the smart money. Now the $1,000,000 question is, how do you spot those smart money activities in the financial market? Here I come in now. All right. So the first thing that we need to understand is that we want to ask the question in order to know what the smart money is up to. We want to know how they behave, their behavior. So the first thing that you want to understand, all right, is that the smart money always buy low. When the price is very low, very cheap, below even the fair value is at a reasonable price, where there is a value, they always like to buy low. The second thing that you need to understand is that the smart money like to sell high. For a technical trader, it means that where they did buy before, they were likely to buy again there at those specific price level. All right. So that's the first thing you need to understand about the smart money. The smart money also like to buy in what we call the sweet spot Fibonacci zone, the zone between the 50% and the 61.8% Fibonacci retracement level. That's the second thing. The third thing that you need to know about the smart money also like to buy or sell at the 78.6% Fibonacci retracement level after a trend. So that's very, very important thing to know. After a trend, price pull back to the 78% Fibonacci retracement level. All right. So you may say, George, I already know this. All right. I haven't finished yet. We are just starting. All right. The fourth thing that you should know about the smart money is that the smart money, love, to buy when the price form equal low or equal high. That specific chart pattern, which I do not want to mention because of the Google algorithm will mark my video, for a review. All right, equal low, equal high. All right. So smart money, like I mentioned, double top chart pattern. They want to sell, especially on the yearly chart. Watch out for the double top and the inverted double top. You know what is the inverted double top? I don't want to talk about it in this video because the algorithm will ask me to send a video for review. You understand? All right. So the fifth thing that you should know about the smart money is that the smart money like to buy or sell at the 138.0, not 138.2%, 138.0% Fibonacci extension level. And the sixth thing that you should know about the smart money, talking about their behavior before we can dictate the activity in the financial market, is that the smart money, like to make a decision, buy or sell or time in the financial market when the S&P 500 is turning from bearish to bullish or is turning from bearish to bullish. This is about the market itself. Now we can say more things about the smart money, talking about fundamental analysis and so on, but technically speaking, those are the things you want to know quickly because we are technical traders, all right? talking about the behavior of the smart money. So you may say, John, what is a smart money? All right, smart money, we are talking about hedge funds, so we are talking about big financial institutions, we are talking about the highly sophisticated private investors that are moving the market. So they make excellent decisions from all the time, like Mr. George Soros is, a very influential market participant, all right? You want to know about Mr. George Soros, hedge funds, then we are talking about activity of the hedge fund, the big financial institution. They are the one pumping more money into the financial market, all right? And their activity are moving the market. So ordinary trader, retail trader, day trader, swing trader can profit in the financial market if they can follow those elephants, so to speak, in the financial market, the smart money, all right? So the word smart means they are intelligent market participants, intelligent investors that are timing the market correctly, that are buying at the right price, at the right price, okay, and selling at the right price, all right? The number one enemy of the smart money is the market distortion. We'll talk about that in another video, all right? So now we know the behavior of the smart money. How do we spot, okay, the smart money activity in the financial market now that we know how they behave, all right? So the key level, or what I've said to you about their behavior, all right? So this is a significant high, all right? So now we know that the smart money, okay, is a significant high here, all right, right here. And this is a significant low. So what has happened here? They sold it here before. All right, so what they have done here, they sold, yes or no? So if the price return to the place where they sell it before, what will be the first thing that they will do? They will try to sell again because they know the price where they did sell high. So this is the trending fair. At the top of the trending fair, they sell high because the smart money sell high. But in order to detect the activity, we use the trading volume. Very powerful. A technical indicator that will help you to detect the smart money activity in the financial market is to combine, okay, the trading volume with the behavior of the smart money. So if we see a surge in trading volume, all right, at the point where the price is, for instance, at 78.6% Fibonacci retracement of the prior trend, when the financial instrument is considered as technically oversold, we will know that the smart money is buying. So this is one example here. Price trend all this year. Now it's pulling back. Now it hit the 78.6% Fibonacci retracement level. That's the level. I don't use 78.6. I use 78.0. Here it is. It hit that zone. And look at this. Surge in trading volume. So the average volume, you can see for many years was in the zone of 25 million share. And then we have this one here, 83 million. And look at the huge surge when it hit that 78.6% Fibonacci retracement of the prior trend. Now suddenly from the 25 million share, look, we have 172 million share being transacted in Mattel stock. So you maybe if you watch Bloomberg videos, Bloomberg television, they may say to you, we see a huge interest in Mattel stock. There is above average trading volume for this stock. So everybody will be the analysts will be talking about it. Everybody will be talking about it, but because we understand the behavior of the smart money, that they like to buy the 78.6% level. All right. So if you see a surge in the trading volume in one of those, activity, in one of those areas that I already mentioned to you, the zone between the 50%, 61.8% level, 78.6% level, 138.2% Fibonacci extension level, probably forming a double top or the double bottom chart pattern, and then we see on the second low or second top a surge in trading volume and so on. All right. By combining, the trading volume or the surge in trading volume and, the smart money behavior, by understanding the behavior of the smart money and using the surge in trading volume, we are able to pinpoint the activity of the smart money. Now, I need to tell new trader that the smart money will do everything, all right, to hide the activity in the financial market. Now, why? Because there is a competition between one group of smart money and another group of smart money. So, if you work for those people like hedge fund, you need to understand the word confidential. So you can go around and say, oh, today we just buy a lot of shares. You can go around and do that, all right? So there is a competition between the smart monies. This is one of the reasons why they will do everything to hide their footprint. They also understand that a lot of retailers try to mess up their trade, so they don't want them to know what's going on. But with the trading volume and by understanding the behavior of the smart money, one can pinpoint the activity of the smart money. Here we will be watching carefully why this surge in trading volume, because the surge in trading volume is usually followed by a price move. As a technical trader, without violating the market pattern, we just draw the channel and wait. Here it is, going up, it went up a bit, okay? All right? But traders who understand area way will do more miracles, so to speak, to detect the activity of the smart money, talking about corrective waves. All right? All right, so you see here, this is surge in trading volume here. I'm going to go a little bit deeper now. How do you know they are coming out? So I talked about this one more time before. Sometimes you see that activity here, if they are buyers, okay, so like this one now. If they are coming out again, sometimes you will see it. Then you see another surge in trading volume, okay, alerting us again that they are coming out. Now, I don't want the video to be too long. I will give it to you quickly, but we're going to continue this discussion in the near future, how to spot when they are coming out. So I don't want the video to be too long, okay? Look at another surge into the volume here. Here it is. Okay, this is 197 million share, which is higher than this one they have here a few years ago. Another high surge into the volume. If you look carefully here, that is exactly at the 50%. So here it is. I'm talking about this one here. The price was in a zone between the 50% Fibonacci retracement and the 61.8% Fibonacci retracement of this move up. So there was a move up and price pulled back to the sweet spot Fibonacci retracement zone. And what is this? 197 million shares being transacted in that zone. We know it's the smart money. All right. But as you can see, price did not go up forever. Yeah. Contrary to this point. So here it was considered as oversold. It went up, pulled back, down, up. Okay. And here again, the sweet spot zone, the behavior. So first thing you want to understand, how do they behave, the smart money? And then use the surge in trading volume to spot the activity. Look at this one again. There's one recently here. What's this one? Where is the price now? The price now at, can you see, 78%. I use 78 again at a 78.6% Fibonacci retracement. And again, look at that. 288 million shares. Never in the history, so far, with the information that I have, never in the history of Mattel, we have 288 million shares after 1, 2, 3 move down. Minimum price move is free. So here we will say to traders, prior to bullish signal above the $12 level and prior to bearish signal below. So here we have a surge in trading volume when the price is in a zone of 78% Fibonacci retracement level. Now, a lot of ordinary investors and technical traders say, George, thank you so much. Or what I'm going to do now, all right, I'm going to go and empty all my children's saving account, my own trading saving account, and I will borrow as much money as I can and just buy Mattel, and I will be enjoying my retirement, my life forever. Don't do that. All right, don't do that. This video for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. All right, it's for educational purposes only. Now, for traders who know how to control their risks, technical traders, here we will say we have a trading setup, a bullish trading setup. Now, we must implement a different time frame trading method to trade it. And if the signal fails, will come out without blinking. The warning line is the $12.03. This is about the smart money activity here in this zone. All right. All right. I want to highlight one more thing. Here it is. You will see here in this session here, not much did happen, but it's a surge. So you have the first surge a bit early. Again, here we have at the bottom, here it is, this one. So few years, you see, it was quiet after this one here. And then suddenly, we have this one here. All right. Because prior went up again. All right. And then pull back to the same zone, 50%, 61.8% Fibonacci retracement of this prior trend. So don't forget the sweet spot zone of the prior trend. Okay, so here it is. So it went up a bit, come back to the same zone. They have again a surge in trading activity. But this time, so do not assume that they are buying. This is very important. So if you see the surge in trading volume like this, don't assume that they are buying. Behave like a technical trader. If you are an ordinary technical trader, you need to be, if you are an ordinary investor, if you are an ordinary investor and you do not know much about technical analysis, be careful. Don't just buy because of that. All right. So as an investor, because I don't want the video to be too long, the smart money, okay, does not buy or sell without performing the due diligence, without checking the balance sheet, the cash flow, okay, the management, all right, whether the company has a brighter future, how the company is coping with competition. I don't want to talk about that today. I want to talk about how we spot the smart money activity in the financial market without too much hassle. This is about understanding their behavior and paying attention to the trading volume. That's it. In 2009, here it is, we see again a bit of surge, similar again to the previous one, this one. So after this one, we had this one. And here you see again, we have again a bit of surge again in the zone. 2009, this is about the behavior of the smart money. Smart money, okay, will buy, will make decision when the market, the S&P 500, is turning from bearish to bullish. In 2009, beginning of 2009, the S&P 500, it was turning from bearish to bullish. This is the time when the smart money is very active. And the surge in trading volume that we will notice that time, we need to pay attention to those surge in trading volume. Now, I can go on, and the video will be too long, or I can break it down. So what I will do, I will stop today here, hoping that, okay, you learn something from this and will put into use. And most importantly, practice first until you master it. And if you like it and you know exactly what you are doing, well, that's your decision, all right? This is what we are talking about. Okay, so if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. So this will conclude our discussion today about how to spot a smart money activity in the financial market without too much hassle. We are looking first, how do they behave? The smart money buy high, smart money buy low, and sell high, all right? They buy and sell at a specific price. So they sell here before, they try to do exactly the same thing there. They buy here before, they try to do exactly the same thing, but at a low price. And they will sell high at the top of a trend, all right? They buy low at the lowest point of a downtrend, okay? Very important. That's the first thing, first behavior. They also buy in a zone of 50%, 61.8% Fibonacci retracement level, okay, of the prior trend, either bullish trend or bearish trend. No, the 50%, 61.8% Fibonacci retracement level. All right, this is about the behavior of the smart money. They also like to buy in the zone of 78.6% Fibonacci retracement of the prior trend. I use exactly 78.6. I use exactly 78.0%. All right. They also like to make decision, okay, at the 13138.2% Fibonacci extension level of the prior trend, all right, and also when the market is turning from bearish to bullish or from bullish to bearish. So this is about the behavior of the smart money. Now we want to combine, watch the surge in trading volume, not just volume, well above trading volume, extraordinary surge in trading volume, like this one here, you see, just happening now, and so on. At those with the behavior of the smart money, we are likely, okay, their behavior, we are likely to spot the activity. So like this one, the way it is now, we just sit and watch. Like technical traders looking for a clear cut. This is a trading setup. Wait for a clear cut signal and take it like a pro. You are trading Mattel. You are trading first the S&P 500, then the sector, all right, of consumer cyclical before you are trading even Mattel itself without ignoring. So you will go to Google Finance, check the economy news relating to the stock, the financial instrument that you want to trade, perform at least Google as it takes, okay? Check their balance sheet, what's going on, check the story, check that sector, what's going on. Look at the market environment itself, what's the S&P doing, is it bearish, is it topping up, or is it the best time to buy a hold, is it turning from bullish to bearish, is it more likely to turn from bullish to bearish, and so on, before you start making decision, all right? So this is it. So if you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you like this video, please give us a thumbs up. If you dislike it, please give us a thumbs down, alright? If you find it amazing, alright, feel free to share with your friend on Reddit, on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the SGW24 traders talking about how to spot smart money activities in the financial market without too much hassle. Happy trading to you all and speak to you soon.